in the coal mining sector. But moving on to the other big story, the 11,400 crore rupee scam at Punjab National Bank, that continues to remain in top focus. So after a series of raids by the Enforcement Directorate on several of his properties, Nirav Modi, one of the prime accused in the bank fraud, has penned a letter to Punjab National Bank. In his letter, Modi writes that the liability of the group is substantially lesser than the 11,000 crore rupee sum that has been reported by the bank. He goes on to say that there has been no default by any of his firms over the years, and had the bank agreed to his request to sell some assets, the value of which was pegged at 6,500 crore rupees, he would have been able to pay back his dues. Now he says that the search and seizure operations against his companies have destroyed his brand and business and have jeopardized his ability to discharge the debt to the bank. He also goes on to say that the bank's unwarranted haste to recover the dues have restricted its ability to recover all the dues. Meanwhile, the Chief Justice of India has agreed to hear a public interest litigation plea against Nirav Modi on Friday. That PIL seeks Modi's deportation in 2 months and wants action against the top brass at PNB as well as RBI officials. Now, Nirav Modi's lawyer, though, has told the press that agencies will not be able to prove the charges in court and his client will be found not guilty. Right, but staying with that story, the CBI has arrested 3 officers of Punjab National Bank's Brady House branch. That is the branch at which this alleged fraud has taken place. They are to be produced in court today. Let's go across to Utkarsh for all the details from there. Utkarsh, so who are these officials and what do we know about their complicity in the Nirav Modi fraud?
So, Arib, this is basically widening the case from the 2 officials which were mentioned in the complaint by Punjab National Bank. These all 3 officials are from the same branch where the other 2 Punjab officials were. So now the total number of arrests have gone to 3 and now 6 out of them 5 are PNB employees. If you look at the 3 employees, one is Bachchu Tiwari, who's the chief manager Forex. Now the Forex is a very important part, and this person was the one whom Gokul Nath Shetty, who's the main accused in the FIR from Punjab National Bank, was supervising too. So the complaint alleges that Bachchu Tiwari knew what was happening in PNB. The other 2 people who have been arrested are Yashwant Joshi and Praful Sawant. Now both of them were juniors to Gokul Nath Shetty. One was working in the exports department and one was working in the Forex department, and that is why it is being said that both of these people also were a part of the whole strategy which was being built to keep the entries away from the books of accounts. So these are the 3 people. They will be produced in the police in the Sessions Court anytime today. Remember that anyhow the earlier 2 PNB officials are in the custody of the Central Bureau of Investigation till the 3rd of March, and it can be a case that the details of these 3 people would have come from investigations from these 3 only. So now we have to wait and watch that how long will a police custody will these people get. Now in cases like these, normally police custodies are not very difficult a task for the CBI, but what will be important is what will the remand copy submitted by CBI in court say, and what allegations will they make on them, as well as in the court we can see the CBI officials really telling us of what they have really got from investigating the 2 earlier PNB officials which were arrested.
Right, thanks for that, Utkarsh. Now, there's another angle that is opened up in the story. So, we're learning from the Income Tax Department. It has served a notice to Anita Singhvi, wife of Abhishek Manu Singhvi, the Congress leader. This is related to jewelry she allegedly purchased from Nirav Modi's showroom. So, let's go across to Timsy to find out what the matter really is. Timsy, why has the notice been sent to Anita Singhvi?
Yes, as you rightly said, Anita Singhvi has been identified as one of the persons who was purchasing jewelry from Nirav Modi in cash. Now, remember the transaction which is under IT scanner right now is a purchase worth 6.5 crores, out of which 4.5 crores were paid in cash and the remaining 1.5 crore was paid through check. And the IT department today has served notice to Anita Singhvi under Section 131 of the IT Act, asking her to explain the source of income of the money that she paid in cash. And remember, very crucial, there are clear guidelines of IT department, of Revenue Department, that any jewelry purchased worth more than 2 lakh cannot be paid in cash. One has to pay it through check or make bank transfer. So this particular
right,
transaction
absolutely.
is
Thanks
under...
so much for...
Yeah.
Right, Timsy, carry on. What were you
This
saying?
particular transaction is under scanner, and remember last evening we reported that about 250 crores worth cash transactions were made by Nirav Modi in due course of time, and they are also under scanner. Government has already identified 100 crores worth cash transactions by people through their PAN database, and this is one of the cases that has come forward from that 100 crores worth of transactions which have been detected by the IT department and identified. Remember, there's another 250 crore rupees worth cash transactions which are yet to be identified as to who bought jewelry in cash. Back to you.
Right, absolutely, Timsy. Thanks so much for joining us with all the details from there. So there you have it, but that's not all. The Income Tax Department has also attached 14 bank accounts of the Rotomac group of companies. These accounts include 3 bank accounts that belong to Rotomac's promoter Vikram Kothari and his family. The Tax Department is still identifying further properties that can be attached pertaining to that case. But away from the world of frauds and scams, let's move on to all the action at Dalal Street today. So range-bound trade in a last-hour dip, that's what defined today's market session. The Nifty traded in a strict 40-point range throughout the day until it saw a sharp fall in the last 45 minutes of trade. So the index closing below its 100-day moving average at 10,360. The Sensex also following suit and ending with a cut of 70 points. The mid-caps ended flat while banks underperformed, breaching 25,000 to end 0.75% in the red. Anuj Singhal joins us now with a wrap of the day's trading action. Anuj, seems like a last-hour disappointment for the bulls.
Well, the kind of day the bulls would dread. The market had a slow, sort of weak recovery through the day till 2:30. Piecemeal kind of gains for individual stocks, but in last 30 minutes, last 1 hour, everything came off and the market ended almost at the low point. Large private banks once again led the sell-off. While there was some intraday recovery, some short covering in PSU banks, some of the middle stocks rallied, but really the story was in the Bank Nifty today. The large private banks, as I said, HDFC Bank, ICICI, Kotak, Yes Bank, all of them ending closer to the low point of the day. Other losers included names like Mahindra & Mahindra, Aurobindo, IOC. On the gaining side, Ambuja after the numbers looked good. Vedanta and Coal India as well were higher. And in the F&O space, there were some gainers today. Stocks like Fortis, PSU banks, most of them saw some short covering. IDBI, Bank of India, Syndicate. Arvind was higher, Titan was higher. But bulls would be disappointed with today's close. Let's see. Tomorrow, of course, US markets will also be opening today. So we'll have cues from that market as well. Will be interesting to see if we can defend the recent close.
Right, thanks, Anuj. So that's how today's market session transpired. But on that note, we slip into a short break. Coming up on the other side, the NPPA is analyzing hospital bills. It says that doctors and hospitals prefer prescribing branded drugs, not under price controls. We'll bring you all the details from that story on the other side. Welcome back. You're with us on Reporter's Diary. Now on to the big headline from the pharmaceutical space. So sector regulator NPPA has analyzed the bills of some hospitals and concluded that the doctors and hospitals prefer prescribing branded drugs which are not under price control. Ekta Batra joins us now with all the details. Ekta, what has the pharma regulator found in its analysis, and what are their recommendations to tackle these concerns?
Well, yes, the NPPA has come out with a very in-depth report after analyzing 4 bills when it came to overcharging of hospitals. So the 4 bills of these hospitals were analyzed by the NPPA. A couple of important takeaways included with the fact that the doctors' hospitals, according to the NPPA, have preferred prescribing and dispensing branded drugs which are not under price control. And they have compared it to the fact that, you know, there is some variation of a particular drug which is actually under price control and then released by a pharmaceutical company, which is then differentiated and hence does not fall under the price control mechanism. So the rate of growth rate in non-NLEM drugs is actually almost double the rate of growth that we've seen in the NLEM drugs. separately, they have mentioned that the issue of migrating to these non-NLEM drugs, or those which are not under price control, needs to be addressed via policy intervention. Now, separately, they have gone on to talk about consumables, etc. But something which really stood out was the profit margins in syringes, catheters, which were, for example, used in 3 cases, is actually a case of unethical profiteering according to the NPPA. In fact, some manufacturers have requested the NPPA to intervene in terms of rationalizing trade margins when it comes to such devices. Lastly, in order to sum it up, they have mentioned that patients in all cases have said that the estimate of expenditure has been inflated by 3 to 4 times. Patients were not given any choice or opportunity to procure drugs and devices from outside the hospital, and the major beneficiaries have been hospitals rather than drugs and device manufacturers in this case.
Right, thanks Ekta for joining us with all the details from there. On that note, we'll slip into another break, but coming up on the other side.
An important part of what my father's doing and what other politicians around the world who've had pretty good success is actually addressing real issues and tackling them.
Donald Trump Jr. arrives in India to push the sales of the upcoming Trump Towers, says he is upbeat on Indian realty. We'll get you that conversation after a short break. Welcome back. You're with us on Reporter's Diary. Now, Donald Trump Jr. is in India to promote his family's real estate projects. So while speaking to CNBC TV 18's Manisha Natarajan, he said that India is the largest market for his real estate business when it comes to projects. Further, he's added that the introduction of the real estate regulator, RERA, may have shocked the market in the beginning, but holding real estate developers accountable will benefit home buyers in the long run. Listen in.
Been reading reports that after your father's presidency, the Trump real estate brand has come under fire in several geographies. Does that bother you? And how do you tackle it?
Listen, I think it is what it is. I think there comes a point in someone's life where you actually have to take a stand, where you actually have to do what is right and what is important. And it may not necessarily be popular to all people, because everyone wants to believe that the world as a whole is a great place. But I think an important part of what my father's doing and what other politicians around the world who've had pretty good success is actually addressing real issues and tackling them, not just for popularity's sake, but because they actually have to be addressed. And so, I think when you do get into politics, there is sort of a binary nature to it. You're either this way or you're that way. There's not really much common ground these days. And I think that's unfortunate, and I think that could change for the better. But, as a business, we're going to continue to run. We have incredible assets all over the world that will continue to operate and to grow, certainly in the United States. And it's just a factor of life. Like anything else in business, there's curveballs thrown at you every day. And we'll continue to do what we do well and surmount those obstacles.
Between your India journey, striking your first deal with Panchsheel, your second with Lodha, to now doing something with Pankaj, and of course your Kolkata partners, the rules of engagement in this market have changed, haven't they? There have been some
very much so.
Policy changes which have been very big and shaken the market completely. Have your rules of engagement changed as well between your partners?
Well, I think there's more of an understanding. I mean, again, from a foreign investor seeing some of those rules, why they may have shocked the market sector, certainly within developers, right? I think holding people more accountable that way is going to be great for the purchasers in the end. And if you don't have the purchaser, or you scare them away through repeated bad experience, you have no market. So I think what's gone on, with the regulations over the last few years, while perhaps a shock to the system initially, for the long term is incredible. You listed the names of our partners, sort of, in my opinion, the cream of the crop, right? The best of the best. And so that didn't just happen overnight, though. That took years of being here, being in the market, believing in the market.
I know.
I said it, like I said, years ago, I said, hey, this is going to be a big market for us. I don't know how, but I see it, and I know that we're going to do it. And then it was time. It was time on the ground. It was time with the individuals, with the partners, forming those true friendships, not just talking about business. And it also meant sacrifice, in that you don't just jump on every deal that's presented. Just because you can put a couple dollars in your pocket today doesn't mean it's the right thing for you, for your brand, in the future. And so, there is an element of discipline associated with there. And that's part of it. The biggest thing is, after a decade of forming those relationships, to say, hey, we have to take a time out for a few years as it relates to new deals, is difficult, because you spend a lot of time forming those things. And now that you're there, now that you're with the best, we could do so much. So I still believe in this country and in this market with these guys, as it's going to be the future of international Trump businesses.
If you want to catch that entire conversation, we are playing that out tonight at 7:30 p.m. exclusively on CNBC TV 18. And time to slip into another short break. Coming up on the other side, the IT sector shows signs of recovery. Industry body NASSCOM pegs growth for the next fiscal at 7 to 9%. We'll bring you all the details from the leadership forum on the other side. And the top story this evening, the Modi government today took a giant stride towards ending Coal India's monopoly as far as the commercial coal mining is concerned. So today, the Cabinet Committee of Economic Affairs approved opening up coal mining to the private sector for commercial use. Now, remember, ever since the nationalization of coal mines in 1975, Coal India has been the sole commercial miner in India. They also account for 80% of the country's coal production. So announcing that decision earlier today, Coal Minister Piyush Goyal said that the auction would take place on an online platform. Companies which submit the highest bid will win. But that's not all. Piyush Goyal also reiterating that there would be no restriction on end use and prices. Companies can hike or lower prices in the open market. Piyush Goyal also going on to say that the move would help increase efficiency and productivity in the coal sector.
नया निवेश इस क्षेत्र में आए, कोयले के क्षेत्र में भारतीय कंपनी भी करे, विदेशी कंपनियों को भी हम आमंत्रित करेंगे, अंतर्राष्ट्रीय स्तर की आधुनिक टेक्नोलॉजी को अट्रैक्ट करेंगे और मुझे लगता है लाखों लोगों को नौकरियों के साथ-साथ जो हमारे पूर्वी भारत के जो अधिकांश प्रदेश या जो प्रदेशों में कोयला है, जैसे पश्चिम बंगाल, झारखंड, छत्तीसगढ़, कुछ मात्रा में मध्य प्रदेश, महाराष्ट्र, तेलंगाना, इन सभी, उड़ीसा, बहुत बड़े रूप में उड़ीसा, इन राज्यों को सबसे बड़ा लाभ होगा.
It will be very bold and very encouraging steps what government has done. This will definitely change the facade because the phenomenal, but only one company, Coal India, which is doing very well, but we need more company, more exploration. So this will bring, I'm looking forward the foreign players to come, and because it requires huge investment.
The fact that the government has opened it up is a step in the right direction. You see, Coal India may be doing its job well, but at the same time, India is not a country of a size that can depend on only one company for supplying its coal. Growth in coal production will continue for at least 2 more decades, whatever said and done.
Okay.
Because coal is still 80% of power generation. It can at best go down to 75%,
Okay.
but nothing more than that.
Right, and from the coal sector to Indian IT, and the industry is expected to grow at a slightly faster clip in FY19. That's the assessment of industry body NASSCOM. But even as the growth rate is projected to improve marginally, job growth is likely to remain stagnant. Kritika Saxena and Nitya Balakrishnan report from the NASSCOM Leadership Forum in Hyderabad.
NASSCOM today released its guidance for FY19. It is expecting IT sector to see a growth of 7 to 9%, which means FY19 will be better than FY18, which saw a growth of 7.8%. We spoke to NASSCOM and several mid-cap IT companies that believe that they will be able to cross that 7 to 9% guidance.
You see, first is if you look at the macro picture, then we are seeing an uptick in the global economy. At a global level, in the US, in Europe, and many of our key markets as well. That is one key indicator, because usually that translates into better business opportunities. The second is, if you look at all the forecasts of technology spend, that is also in sync. Because whether you look at Gartner, Forrester, all the people who track these trends, not only are those positive, but they have been revised several times, because they are revised on a quarterly basis, and the prognosis has always shifted upwards, which means that even those estimates are being revised upwards. All of this means that there is very strong reason and grounds for optimism.
We brought out very clearly that we see that upswing coming in the second half of next year, because for this to translate into business, the optimism that we are seeing globally, it was very evident in Davos. The optimism we are seeing in the Indian growth rate, there is a lag time, and we are factoring in that lag in the latter part of the year.
Our aspiration is to grow faster than industry, and like you said, we've been living up to that expectation over the last few years. And if all goes well, hopefully we should do better than 7 to 9 next year also.
I believe that it's a very conservative estimate at this point of time. They'll certainly meet those numbers, because there's, I think, fairly large amount of upside still to capture, which is unfolding at this point of time. There are new technologies which have come in, and people are now at this point of time trying to feel the technology.
NASSCOM's report also indicates that the job outlook in FY19 will be very similar to FY18, where only 100,000 jobs were added directly by IT companies.
So 100,000 by this industry is the net new increase. A lot of losses that happen, a lot of attrition that happens in this industry is being hired by companies that have to digitize. All the digitization impact, where we are saying, is growing at twice the rate at which this industry is going, or more, is consuming those people.
While NASSCOM's FY19 outlook might have been the top headline, the highlight of the day undoubtedly was Sophia, the world's first humanoid robo. And Nitya, I caught up with David Hansen, her creator. Take a look.
I have visited many places in the
How are you coping with the air pollution?
I hope to have real physiological feelings someday, through which I will be able to express my emotions.
This is a combination of robotic hardware.
As a child, I was very interested in science and math, and I was also interested in arts and ideas.
Okay.
Ultimately, the study of science and engineering and math led me to the conclusion that if we could achieve a true thinking machine that would reinvent itself to be smarter, playing with ideas, that playful energy, that inspired me to develop Sophia as a quest to make machines that are wise and emotionally meaningful to people.
Right, on that note, we'll slip into a short break, but coming up on the other side, after analyzing bills of hospitals, the NPPA says doctors and hospitals prefer prescribing branded drugs which are not under price controls. We'll bring you all the details on the other side. Also coming up after a short break, our special report on how Karnataka is taking giant strides under its electric vehicle policy and its energy storage policy after M&M bags the biggest private order for electric vehicles in the state.